So thanks, Ben. Thanks a lot for having me, and thanks to Becca Lesher, who connected me with Ben. Also want to recognize our CFO in the room is Mike Lesher, right over here, sitting with Becca. So this is a fantastic place, and congratulations to you guys for and Ben for and the others in the room for getting this place off the ground, and it's phenomenal. And I never had anything like this in college, and congratulations to all of you guys for supporting it and spending some time here instead of hitting the early happy hour. So yeah, free form. Let's make this free form, very informal. Stop me, throw up a hand. I don't want to talk for 45 minutes without a question. I'll get very bored and tired. And I have a general outline of a few things I thought would be helpful for you to know. And then at the end, I'll keep some time for open questions of things maybe I didn't hit, and then I'm going to stay and have some lunch, and please come up and ask direct questions, and I really appreciate the opportunity to help you guys in any way that I can. So background, network building and consulting. We're based in Hanover, Maryland, which is just south of Baltimore. What we specialize in, we're a business-to-business, a B2B. We service the wireless carriers, so the thing I always like to say is we make your cell phone work. So T-Mobile, Sprint, Verizon, AT&T, they subcontract out a tremendous amount of cell site development work. So think about the business as when they need a new cell site or they need to modify an existing cell site for another technology, we're brought in to do certain services to do that. And the cell site modification is a big part of our business because you guys see it in your use of the networks and what everybody does, going from 2G to 2.5G to 3G to 4G. We're brought in to do all that. And everyone's like, oh, you build towers. Well, some of our work is towers. What you find out about these networks is most of it's sprinkled throughout rooftops all over cities like this and on water tanks. And that's typically in the industry the first choice for a new site, as opposed to throwing up a new ugly tower in the industry. So we have our scope. Those services include real estate. So you have to find a site, you have to lease a site. We do all the zoning and permitting, which is very challenging sometimes in the municipalities, especially when it is a new tower. We have an engineering firm, so we do all our own civil drawings and our structural analysis on the engineering side. And then we have a newer division that does actually the construction and the install, test, and turn up of the radios. Where we are today is we have about 240 employees spread over 4 offices. Hanover is our headquarters. We have an office in Richmond, an office in just outside of Philadelphia, and an office outside of Boston. 2013 revenue was $56 million, and our projections for 2014, we're projecting $64 million in revenue for the current year we're in. So by way of background, and you guys are entrepreneurs, right? How did I get to running a $64 million and growing company? So in 1997, I was hired at NBNC as the lowest guy on the totem pole in the entire organization. I have a business minor, I have an English degree. I had no formal business training at that time. I had worked in commercial real estate, and back to the real estate aspect of our business, I was brought in to do deals in the field. So I loved the business, it was exciting. It was a small business at the time, it's still relatively small, but it was like 50 people held by a sole proprietor. So the thing I loved about the business was getting new work for the company. I love sales, I love business development. So I was in, we were all kind of in a small company. You're always, and you guys are entrepreneurs, you do this every day, you're wearing 10 different hats, right? So in having to go out and do the field work, I was also chasing the carriers about, let us do some more services for you, let us do some more work, and that's where I really love that part of the work. I love chasing deals. I love doing deals for the company and bringing in new revenue and hiring people and really just growing a business was very exciting. And I was very fortunate because they gave me the opportunity to do more of that, number one. And then and we just started growing the business. And then it really became me and two other guys running the day-to-day for this founder who had founded the business about 10 years before I jumped in. And during those heady times, those go-go times where we were growing it, he wanted out. So he was ready to semi-retire or retire. So the CFO at the time, one of the three guys I mentioned, me and Brad and Carl, he went to market to find George a deal to sell. And it's interesting, Brad, who I mentioned is the CFO, he's still a very good friend of mine. He's the current CFO of Under Armour down in Baltimore. So he's done extremely well himself. Brad went to the private equity shops and went around, who wants to acquire, and I don't know how much education you guys have had in that world, in the private equity world, but you have a ton of these shops out there that want to jump in, buy a business. The typical model is they want to own a business for 3 to 5 years, make a 3X, and then flip back out and resell it. So that's what we did for George. Baird Capital Partners came in, bought George out in 2000, and asked me to take on a role of vice president. And typically, when they do a deal like that, they're looking at existing management to see if someone can take over for the leader, and then they're weighing their options of bringing in a hired gun. So they brought in a hired gun professional CEO who had run other businesses. I worked for him as a vice president for several years. And that's what we did from kind of 2000, 2001, in trying to grow the business and run the business that way. What happened then was in 2002, the bottom dropped out of the wireless industry as far as work. The carriers dried up. They just kind of flattened out. There was no new work out there. And we had grown a lot in 2000 and 2001. And in 2002, in 2003, we had to get very small. It was a very tough time for any business leader. I had to lay off a lot of people I hired. But we had to survive, and I learned a lot. I learned a lot of lessons. It was one of those things that was incredibly hard 2 years to go through professionally, but I came out of that better because I saw some of the weaknesses in our business that led us up to not being that well positioned to get through that. And then in late 2003, I got a phone call from the director of the private equity firm in Chicago and said, meet me at BWI tomorrow. It's like, well, this is interesting. This is either going to be really good or really bad, right? But he didn't ask me to bring my laptop, so that was a good sign. And I had a feeling if I was being fired, it would have been the CEO that was going to fire me. So he flew to BWI and said, we're letting go of the CEO and we need you to take over. So I did that. I was very fortunate in my timing because I had started to see the horizon coming. Sprint was getting busier again. Verizon was getting busier again. I had a good gut feeling that 2004 was going to be better. I certainly didn't tell him that. I just told him I was going to make it happen. And I just took control of the business and really just rolled up my sleeves on the sales and BD effort and flew all over the East Coast for a year winning work, and relied on a lot of good people to help me get the thing back on its feet. So after a period of time then and working for Baird and running the business as president for Baird, they asked me to take the business to market and they wanted out. They had long since passed their typical horizon of 3 to 5 years of being in a investment position in a business. So I took them to market. I took the business to market. It really wasn't a great. People don't like buying services firms. They don't have high multiples because typically it's just people that can leave. We were still relatively small at that time. I think we were doing $7 million of revenue, give or take, so pretty small. So the offers coming in were pretty low, and then after I saw the offers coming in, I told Baird I wanted to buy the business, which I did and led a management buyout in 2007. So that was in 2007, and that's one of the points I wanted to kind of share some thoughts with you about. I learned, I'd never bought a business before, so I had to learn a lot very, very, very quickly. Go ahead.
Where did you get the money from to buy that business?
Great. So that's where I was getting to. How do you do it, right? So first off, you get advice from everywhere. You call people, you network. I knew some guys in Wall Street. I knew some guys I'd gone to college with that had worked in private equity. I knew some guys that were owning a business, and you just start. And I had been the president. I knew certain things, certainly. I knew of our bank deal. I knew how that was structured. I had been a part of some other financing negotiations at the company, but not at a level of being the guy, right? So the way I was able to, and I was fortunate, Baird wanted out, so that's a good thing. They wanted out. I figured at the time we were pretty much written off on their books as either a loss or a break even or a very low multiple. So I figured I was in a good position. They also knew at the time, and if you're running a services organization like I was, and I was doing all the BD, a lot of the value rested on my shoulders of the business. Now, I did have a guy in Wall Street tell me, you fly to Chicago, you tell them you're taking it for debt or you're quitting that day. That's what he wanted me to do. Not my style. The business, they could have told me to go home and the business is done, and now I knew there was a lot of value of me getting a hold of this business because I thought, I just thought it was a great business. So what I did, and Baird was good to me at the time, they put me in touch with their bank, one of their banks who wanted a lot of their work. It was a bank called Key Bank at the time. Key Bank had been calling on Baird saying, we want your business, we want your business, we want your business, and they said, help out Tom. Okay, you want our business, go help out Tom. So I levered the business as far out as I could, which is about a $3.6 million loan, but it wasn't enough. And like typical entrepreneurs, I had to put my name on it, and at this time, trust me, my personal worth was nowhere near $3.6 million. So you had to put your name on that loan. The other thing I did is it didn't get, so this was about, I got them down to about a 2.3 times trailing 12-month valuation of the business, which is very low. A lot of businesses trade, and you guys are probably learning some of this. You can have businesses that trade on revenue, business trade on a multiple of earnings. In our services space, we typically trade businesses like that on a multiple of net income or a multiple of EBITDA, okay? The business today is probably worth a 5 or 6 times trailing 12 net income. You guys get that? And I was able to buy it at like a 2.3. So the offers had been coming in at a 3. I told them that was very low and I wasn't going to support those offers. I wanted to buy the business and I was able to negotiate it down to a 2.3 politely instead of walking out like the Wall Street guys told me to do. At a 2.3, the $3.6 million didn't get us all the way there, so I got a mezzanine facility. And that was an interesting part of the structure in the sense that, here's what I knew. I didn't want to give up any equity if I could help it. I wanted all of management, myself, and folks within the organization to own 100% of the business if I could do it. That was my goal. I knew it was going to be very hard to do that, and especially when I talked to the bank and I was $500,000 short. So I took that piece to market to be a service provider to folks in the industry on the tower side. I talked a lot about how we service the carriers. We also serve the tower companies. You guys could look up American Tower, Crown, SBA. They're public companies that own towers for the carriers. We have a big capability in developing towers for them. I took that to the smaller tower guys and said, let me develop towers for you. I want you to loan me money. And tell me what that deal would look like, and I want to pay you back through either services, loan, whatever. And most of those guys came in and said, yeah, Tom, I'll loan you $500,000. I want 25% of the business, plus you're going to owe me, at a mezzanine rate, which is a pretty high rate, and et cetera, et cetera. And there was one guy that said, I don't want to own your business. I'll loan you $500,000 at 22%, and I want you to give me towers. So that's the deal I did. And it was a good deal for him. We sourced him a lot of towers. We paid him off very, very quickly because I wanted that 22% off our books quick, which we were able to do. And then, and that's how we bought the business. And that's how we bought the business without having to give any equity outside of the management of the business. And that's one of the things I wanted to share with you guys, that understanding our business at the time, we were a services, just people business, right? We don't patent anything, we don't make anything, we don't have factories, we are pure services. And I had come up through the business, and I knew just the value was in the people. So I could have bought 100% of the business myself and just said, well, I'm going to be the owner and you guys are now going to work for me. So instead I picked 10 folks and I said, I want you to participate as an owner. I had them put in very, very little money, almost like a token, and I offered them all 3% of the business and gave away 30% of the business. And one of my messages for you today, and you know, I mean, we've gone from 4 million to 64 million in 10 years, and we wouldn't have that if I had been piggy and tried to keep it all myself. I wouldn't have those numbers. So one of the things I wanted to share with you guys is I feel I'm so much better off professionally, financially, by sharing some of that equity. And I have 10 folks that operate like owners every single day and get the benefit of ownership every single day, and I don't have to worry so much. First off, they're never going anywhere. So it's like the golden handcuffs. You know, they can leave, they may, but they'll take a huge pay cut. Or to go start their own business. But it was a way to get them really dialed into the business, operating like owners, thinking like owners. And our model, I mean, that's not the same. That's not the right model for every business, because every business isn't so key on people. I mean, if you have patents, software, factories, other things like that that are core assets, that might not be the right model, right? That you're supporting people to the level that I did. But I knew it was the right model for NBNC at the time, and again, we've been very fortunate. So raising capital is huge, right? That was, you know, one of the points, just how you raise capital. Debt versus equity is huge. Understanding your value, you know, where do you need to capitalize as an owner, an entrepreneur, on where you put your value in either people, infrastructure, sales processes, whatever. That was the big thing I went through at that time and focused on people. You know, let's focus on the people as I do this deal, and that's worked well for us. Interestingly too, in going through that time, you know, I see a lot of, and I saw how Baird had a controlling piece for a long period of time, and I saw what that looked like. And investors are great, and investors can be dangerous, right? And I just had, thinking of stories I could share with you, I had dinner with an entrepreneur friend of mine last week, and he had done a deal for his business where he had to bring in a lot of financing, and they were right there at the 50-50. You know, he was going to keep something like 50. His new investors were asking for something around 50%. And he's like, my biggest regret is I gave up that 1%. 1%. There's an epic difference between 49 and 51. They control the shots. They're forcing a sale on him right now. He doesn't control that. And he's like, if I could just have done anything, I'd go back 3 years ago and I'd figure out some way to get a different investor or someone that I can keep control, because these investors will run your business. They will tell you what the way it's, they'll only tell you that when they're wooing you and they're going to give you money. I'm in an organization called YPO. I'd recommend that for any of you guys once you progress into your president's role down the road and are entrepreneurs. It's a great business group, and I meet investors in this group all the time, and I see folks running businesses in this group all the time that are controlled by outside capital. And listen, sometimes you need it. If your business needs a lot of capital, that's all you can do. Okay, I can structure a deal where I'm going to keep 5, 10, 15, 20% because I need $10 million. There's just no way I'm going to keep 51%. But the sooner you can cycle out of that in your career, if you can, depending on your business, the better off you're going to be. I call all the shots. right? I like that. No one can force anything on us ever from outside money or investors, and it's a great, great place to be as an entrepreneur because they will get very short-sighted on you. They will be directing your business on a month-to-month, quarter-to-quarter basis, and you can't do the long-term things that you want to do thinking about 5 and 10 years down the road. So that's and again, my note here, if you're raising capital, starting a business, trying to finance a new business, trying to recapitalize, I guess going through that, the thing I thought to tell you guys is just get as much advice as possible from folks you know and trust, and shop it as much as possible. Get it out there as much as possible. If I had done the first 4 deals on that mezzanine that came to me, I would have given up 25% of a very, very valuable business. So the partnering model for me worked extremely well when I put that together, creating partners. The other thing we did at that time, wanted to share with you guys, and again, throw up questions.
Sometimes have very short-sighted aspirations for the business. For your business, what type of long-term goals do you have?
Yeah, so it's an interesting question. You know, I have no exit strategy. I love running the business. We're not growing it for a sale. We're growing it for the long term. I hope to be running the business in 10 years and just continue to grow it. You have to watch that, though. What I would look for is, are we going to get to a point where it's beyond my capabilities? And that can happen. You know, it's easy to run I thought easy to run a $10 million business, fairly easy to run a $25 million business. I feel like we're doing well running a $60 million business, but I have to keep my eye on that. And then you have options too when you're in total control. I can maintain control and hire a new CEO and take on a ownership role and say, look, you have experience running a $150 million business. This thing's outpaced me. You know, I just can't, my capabilities, my experience, I can't, and I'm going to hire you. I'm going to take a board role. But the long-term things we focus on a lot of spending on software, and we've done a lot of things recently on spending money on, we brought in SharePoint and a couple other things that are unique to our space to help us be better on our services years down the line. We've just brought in a new talent manager. You know, she won't really provide value even this year. I mean, I wouldn't tell her that sitting here, but she's going to provide a lot of value in 3 years, 4 years, 5 years. We bought, one of the other things we've done, we've started 2 separate LLCs as bolt-ons. They make up a part of that revenue number, but I bought an engineering business to do that engineering work that we talked about. That was an acquisition. I started the construction and tech silo, and that's a very small part. So we're losing money right now on construction and tech. If I was owned by outside capital, they might be like, why are you doing that? You just lost $100,000 last month on construction and tech. And I'm like, I know. But you know what? In 3 years, we're going to make $100,000 a month. Just give me time, but I've got time to build it. So that's the type of thing that can happen when you have a myopic board looking for a quick sale and really focusing on, because think about it, back to the private equity guys, they typically want to get out in 3 to 5 years, and they're going to maybe trade on net income or EBITDA. So they don't want to make a lot of investments that are going to drag that down and affect their exit. I'll share with you, my friend Brad at Under Armour, sometimes, he's public. That's tough. These public guys have it tough. I mean, it is monthly. It is monthly. I mean, the market does not want to see a monthly hit. He's like, sometimes I get so frustrated. I mean, he loves working there, but he's like, we're working month to month sometimes, and I can't do the things I want to do for 3 years down the road because the market's going to hit us on it. So that's what I'm talking about. Yes?
I just want to ask, is there any dangers, when you growing your company that you go, over a certain limit and become a target? Let's say $100 million in revenue?
Sure.
And you become a target because the companies, there's only 4 or 5 carriers companies, and they say, why should we, outsource this to the...
Oh, we become a target, and the carrier says we're not subbing it out anymore. Yeah, absolutely.
So how do you deal with that? Do you have, a limit saying okay, we're gonna be under the water until this, and then artificially keep it off going?
Oh, I'd never do that. No, we'd never do that. But it's a great question, and you do have to watch, especially being B2B. I mean, it's a great question. You have to watch all the time the landscape, and that we do talk about that. What if the carriers, and the nice thing for me, I've been, in the business
I
now.
understand, like, if it's like $5-10 million.
Right, that's nothing. Right.
Yeah, but like once you grow up, it's just like, well, you know what?
Well, the great thing for me, too, is still for these carriers, 100 million's like, do I have a penny? So, but it's a great point because we do have to watch it, and we do watch it. And the nice thing for us is we get work because we are fast and nimble and specialists. And the companies we work for are multi-billion-dollar behemoth tankers. I mean, they just can't pivot. They cannot move quickly. They've tried. We've watched, and so we've watched the marketplace try to pull some stuff. The carriers try to pull a few things back in-house, try to self-perform different models. The great thing for us right now in my space is that those have failed dramatically. Even some of their different subcontracting models that didn't prefer companies like ours have failed recently, because AT&T is a good example. They went through a couple years, they tried to go to subcontract out to really big companies like Ericsson and Alcatel-Lucent that would in turn come to us, and that's not a great situation for us to be in because they're pulling out margin, and we lose control of the carrier client-to-client relationship, which is not a great position to be in. But that's failed. They can't even, so they're coming back to us, more of the regional, $50 to $100 million providers. So I feel very confident today that that risk is minimal, okay? But it is a great question because you have to watch it. Do you get so big they say, we're not going to do that anymore, or why would we spend $100 million when we can do it in-house for $50 million? Because in other industries, obviously, that could very much happen. But in our space today, and the great thing we have going on for us right now is, the expression we use is it's an arms race out there for the carriers. Your demographic takes up so much bandwidth in these networks. It's just, I want to kiss all of you, It's just fantastic. So they can't keep up. They can't keep up. And so they don't have really an opportunity right now to change their game plan on how they modify these networks and get to, the next step will be 5G. The next thing you guys will be hearing about is 5G. You see all the ads for 4G right now. We still don't even have that built out, and they're already working on 5G and what that's going to look like. So it's a great question, though, and it kind of takes me to one of the points, I wanted to share as a business leader is you're constantly analyzing risk reward. I was trying to think of the different things I could share with you guys of what's it like to sit in a business and you're running a business, and to your point, what's the risk right there? Great. That's what I do 20 hours a week. Is, well, if I do that, what's the risk? If we do that, what's the reward? And it was interesting. I saw something on LinkedIn early this week as I was preparing, and it was Richard Branson's best advice he ever had was his father said, protect the downside. Protect the downside. So as you're growing, you're looking at ways to find where your risk is and do things to protect that. And his story, which was really cool. You guys can probably still find it on LinkedIn because it came out earlier this week. I think if you follow Branson, you can find it on there. He said, I wanted to go start this plane business, the airline business, and everybody told me I was insane because it's not going to work. And he had this great, record business going on. And the way he protected his downside is he went to, I think I have this right, he went to Boeing and said, I want that plane, okay? It's going to be my first plane. And I'm going to buy it from you for X. But by the way, if this doesn't work, you're going to buy it back from me in a year. That's how he did it. And he said they didn't want to do the deal, and he just hammered them on it. He had a deal where he bought a plane, and they had to buy it back in a year if it didn't work. I mean, that's downside management, right? I mean, it is downside protection. That guy's a genius, right? That's why he's where he is. But we do that all the time. And we do that, too, all our revenue has a different risk profile. If I'm doing this service, or this service, or this service, or this service, there's a different risk profile associated with every dollar. If I do a structural analysis on this roof, there's a totally different risk profile for me and our business as opposed to if I give you advice as to whether you should lease that building across the street. Right? So we're constantly looking at downside and risk protection as we grow. It's a great question. Other thoughts I had, I know we're almost out of time here, and please keep asking questions. So one of the things I've learned too, play to your strengths as a professional. I'm a good sales guy, I'm a good BD guy, I'm a good growth guy. I'm not a great numbers or business operations guy. It kind of hurts me, like I don't really like to do it. You know, like looking over it. So after I bought the business, I hired Mike in like 2 weeks. I was like, I really need a CFO, please come in. So my advice about that is, don't hire someone, especially early on. Don't hire your twin or somebody you kind of really click with because, we're both great at sales. Let's go rock the world. Maybe that's what you need, but maybe you need somebody that does a lot of things that is really, and it's common sense, but it's something to think about. And if you're a great operations person, like I'm really good at doing the accounting and setting up IT and this, and the sales for a lot of businesses and ours is right there. Doing sales and business development is huge for us. If we don't execute well on that, if we don't have good people on that, I mean the work just dries up, the whole company would dry up. So just play to your strengths, know what you're good at, surround yourself with people that are smarter than you and the other aspects of your business that you need help with. And that's, back to people, it's interesting. I've found like our numbers have gotten better the more generous I've gotten in pay and benefits. And it's an interesting, we certainly benefit by being in a fantastic market, so that's not always going to work. Not everybody's in a business where wireless is spending crazy money, crazy CapEx year over year. So I don't have like a study of that could say, well, Tom, is the business doing better because of your investment in people, or is it more it just would have happened anyway because of spending coming? But my gut is that we are doing better because we have been very generous to our top performers, and that is in compensation and in benefits packages. And that's been very hard for us because it's hard to be very generous in healthcare with Obamacare right now. The liberals won't tell you this, I'll get on my soapbox for 30 seconds, but it's hitting our businesses in a very, very dramatic way, in a huge way. Our healthcare goes up exponentially, the average, $65,000, $70,000 a year paycheck. And we've done a great job. That's what I mean about being generous. We've taken on all of those increases, but we're up to paying, $1.2 million a year in just pure healthcare. And it's going up. 20% increase is the quote for this year. This year. So that's the result of that policy. Off the soapbox. You can ask me about it later. What else do I have for you guys? So we spend early on, when I was in my 30s, I wish I had known how important communication was. And so thinking about where you are in your careers and what you're doing and advice I could give and mistakes I have made, I didn't communicate enough in my 30s to the level I should with my organization and throughout the organization. And I've really learned that in my 40s. I think a lot of it comes through mistakes and just maturity. But you almost can't over-communicate when you have an organization, and then when you start adding on layers of people and layers of management. And that's something we've put a big focus on at the company, and I've put a big focus on myself, and I think there's a big payoff there. And part of communication is being able to enunciate what your culture is. And that's another mistake I made in my 30s. I kept too much in here. Well, we should do it like that. Or, you're driving home, and well, we shouldn't do that. Or that's not really our DNA. We should do it like that. You have to express that almost constantly. Who are you? What is your brand and what is your culture? Define it. You have to own it. you have to, and trust me, don't set a culture or a brand that's not, in your heart, because you can't fake it, right? If it's about people, make it about people and live it in your decisions every day, because people are watching your decisions every day when you're the leader. But communicate it, and I'm doing a much better job of that in my 40s, of just pushing that out in corporate communications and conversations. It's just conversational. Well, I don't think that's the way we should handle that with that customer. Why not? Well, I think we should handle our customer like this. This is who we are. This is what we do. And all of that permeates throughout an organization. And I did not do a good job of that in my 30s, and I'm doing a much better job. So, again, some of my notes here, brand has to be consistent and requires constant communication. Cultural reinforcement needs to stay in your communication. And don't be shy about that. Don't be shy about expressing that out there. Couple other thoughts. We're doing well here on time. Growth comes from giving power away every day, and giving decision making away every day. I see, again, I mentioned I'm in some business groups, I'm in YPO, and without fail, one of the stories I'll hear, almost every year you hear a story like this. Well, she wants to grow the business, he wants to grow the business. I went in to help him, I was hired as development officer or co-president or whatever, and they just try to control everything. They don't give away decision making, they don't give away authority. Now, you have to do it carefully, right? It has to be well communicated, well set up. But, for a long time, I don't make any day-to-day decisions, and I decided that a long time ago and put people in the power to do that. And you won't be able to grow unless you can give that power away and give that decision-making away to people you trust. So, couple last things for you guys. The one thing I thought of, I was telling Becca about this when we talked on the phone the other day. I read a lot of business books. This one's one of my favorites. The Leadership Challenge. I'd recommend it to you guys if you're in. And leadership takes many forms. Ben, you're a leader today in this organization. Many of you guys are already leaders and starting your own business. And it framed out my. It resonated with me because a lot of it talked to my personality and the way I manage anyway, but a lot of it refined the way I deal with people and the way I lead. And if you're really busy and can't read it, I'll just summarize it for you in like 15 seconds here, okay? All the highlights, but I do recommend you read it. So, quality of individuals are key. One of the great quotes in this book is, quality products and services can only be produced by quality people. And that really resonated with me back when I was putting together the management structure. Just what I just said in my point. Leaders enable others by giving power away. And they did a lot of research, Kouzes and Posner, for this. And their research proved that all the effective leaders we've seen have had a long-term future orientation. They've looked beyond the horizon of the present. And you have to, especially as the organization's growing and getting bigger, that absolutely has to be your orientation. You can't be thinking about day to day. There are top characteristics of admired leaders. And this is, you see a lot of research on this, and you guys have probably seen more studies than I have, but people want to work for honest, forward-looking, inspirational, and competent folks. If you can do that, you can line up people behind you and get them to go over the wall, because that's what you need to be effective and grow. Last 2 points. Challenging your people raises motivation and performance levels. That's an interesting point. There's an interesting section in there on that, on how there's the right balance to pushing people. And you can break that, obviously, and you have to watch that. Something we're talking about at the company quite a bit lately is the right level of pushing. And where does it get kind of broken, and then the culture gets too aggressive, too many hours. And then the last point, and I believe this part very much as you guys grow into your roles, and it's something I've always taken to heart, and even before reading this book, I would tell my folks who are working with me in the leadership capacity is you just have to get out there. You can't manage from a desk. You just absolutely cannot lead and manage from a desk, and you learn so much by getting out and meeting with your coworkers, your employees, your customers, your suppliers, everybody. I mean, just make your world, and you benefit so much from that network. We had a speaker at our event yesterday. I'll recommend his stuff to you guys, Tim Sanders. He's a former Chief Solutions Officer at Yahoo, and he came to our corporate office, and he has great stuff. He's a little left coast, Lola granola, hug it out for me, if you know what I'm saying. But he's a really, really smart guy. He's a genius, and his thing is all about personal and business networks and spending time on it. He's got a couple books written on that topic that you can look up. They're quick reads, they're easy reads, and that's what kind of linking Tim to Kouzes and Posner, they're saying the same thing, spend a lot of time on your network and you'll have a payoff to that. So I did pretty good. It's 1 on the dot. I know everybody's getting hungry. And I'm going to stay for a little bit and love one-on-one. I don't have to leave for a while we have lunch. So I'd love to talk to anybody if anything I can help you with or answer questions. Any group questions before we break? Anything I talked about you want some more follow-up on, or topic I didn't cover? Good? Everybody's hungry. Thanks for having me.